Good day and welcome to Intense Technologies Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you.
Thank you. Good afternoon, and thank you for joining us on Intense Technology second quarter FY24 earnings conference call. Today we have with us Mr. C.K. Shastri, Managing Director, Mr. Anil Kumar, Chief Operating Officer, Ms. Anisha Shastri, Director, Mr. Nitin Sarda, CFO, Ms. Pratyusha, Company Secretary, and Mr. Lokesh from the finance team. Before we commence, please note that some of the statements made on today's call could be forward-looking in nature, and a note to that effect has been included in the earnings release of the company, which is also available on the stock exchange website. I would now like to invite Mr. Shastri to give us a brief overview of the company's performance and to introduce the team. Over to you, Mr. Shastri.
Thank you, Siddharth, and good afternoon to all our investors. Thank you very much for taking time for this earnings call. It's always a privilege to engage and interact with our investors because your critical feedback always helps us improve and do better as we move along as a company. As such, I'm sure most of you know about Intense Technologies, but for those who do not know about Intense Technologies, we've been enterprise products company for a very long time, and rechristened ourselves today into a tech-enabled services in the last 9 months or so. And we are building, as I've shared in the last meeting, we have very marquee customers, whether it is banking, we have customers like Axis Bank, HDFC Bank, IDFC First Bank, IndusInd Bank, Yes Bank, and similarly in the insurance sector we have who's who is our customers. Same is the telecom, we have Jio, BSNL, Vodafone, to name a few, and we have started onto a path where we would want to expand from our existing product to product-enabled, tech-enabled services, which is seeing good results, which my colleague Anisha would be sharing with you a detailed overview of this. I'm sure we are seeing the investments what we are making progress in the right direction, where we wish the company to go forward, and the results are the reflection of the same. We had a year-on-year growth on quarter-to-quarter basis at a 55% growth. 32.78 crores is what we have done in the Q2 FY24 vis-a-vis 21.16. Similarly, half-yearly 56.73 to 36.32. There also we have seen a significant growth in terms of growth, 54% growth. EBITDA, as you can also see that we have 7 crores EBITDA vis-a-vis 6 crores last year, which is again increased by 15%. And same goes with the net profit and EBITDA, which are already published and they are with you. I would not want to take much of your time so that we'll have more time for your question answers. I will hand over the details to be provided by Anisha on the company overview and what we see the company and the investments what we have made in Project Butterfly, how it's panning out, and what is the way forward as a company. Over to you, Anisha.
Thank you so much, CK, and thank you all for joining the call today. My name is Anisha. I'm an Executive Director here at Intense. So for those of you who have been joining this call for the last couple of quarters, you will know that in Q4, we started something called Project Butterfly. This was our initiative to ensure number one, how do we leverage all these marquee customers that we have, and how are we able to farm?
Anisha, we lost you. Anisha, we lost you completely.
Ms. Anisha Shastri? Yes, we can.
Yeah. So, not sure where you lost me, but I will start again. So, for those of you who have been following us on this call, you will know that in Q4 last year, we added a project called Project Butterfly. Now, the intention of Project Butterfly was to see how do we create more revenue streams for the organization. Erstwhile, we were only selling our license and services.
Ma'am, I'm sorry, we cannot hear you.
I am right here.
Now it's fine.
Okay. So we added a lot of large marquee names to our credit, but we were only selling that one license and services around that license to our customers. So Project Butterfly was all about adding new revenue streams so that we are able to farm our existing customers better, and we're also able to provide significant value to newer customers that we're adding onto our city as well. We also further decided that we would focus purely on BFSI, telecom, and government. These are the spaces, these are the domains where we have our expertise, and we said without deviating and without diluting our focus and our resources across all verticals, we will focus predominantly on BFSI, government, and telecom. And third, we were in a good position from a cash standpoint, where we finally had the appetite to make investments into sales. As an organization, I'm sure for those of you who have been following us for a long time now, you know that sales and marketing has always been our weakness. And so we wanted to definitely critically address these pain points. So from Q4 onwards, we started adding additional people in the sales, in our sales engine. In fact, as a matter of fact, even this quarter, we added 4 additional sales personnel with pointed focus around being able to cross-sell, upsell these new revenue streams that we've added. Apart from the IP assets that we already had that we used to service our customers, what we did was we expanded horizontally and vertically around the skill sets that we have and around the IP that we possess. So we added, in terms of new revenue streams, we added communications governance beyond just communication designing and presentment. We added data services, data quality, data remediation, data governance services. We added transmission services to complete the last mile of, the communication piece. We added cloud services to manage our customers' cloud infra migration from on-prem to cloud environments, migration across hyperscalers like AWS, Azure, etc., those kind of capabilities. We have a lot of product-minded talent with us, which the world, as opposed to conventional services organizations, this product mindset really helps in delivering, solutions in a much more generic manner, which customers are able to reap benefits for in the longer run. So we added those talent services and government-managed services. We forayed into government. We finally had the appetite to take on government. And so we added government-managed services also to our revenue streams. We also added strong partnerships with companies like AWS, Oracle, etc., so that we are able to look at how we can expand in international markets, more economically. For us, erstwhile adding one salesperson to man an entire continent, those models were not working out for us. And so our focus has been around how do we add partners that can help us get to, these regions and help us sell our services and IP-based services in those regions. So, in fact, if you look at some of these green shoots that we've added, I'm proud to say that even the few projects that we've already closed over the last couple of quarters, our customers have seen significant benefits. For example, on the communications governance front, Today, we help a bank save about $10 million every year in their communication spend because of the way they're able to govern their overall communication strategy across the entire bank, PAN bank, right? Similarly, if you look at the data quality issue, now if you look at a bank, for instance, they're selling hundreds of products, right, across CASA, credit card, loans, DMAT. They have so many different offerings that they're selling to their customers. And regulatory penalties are huge when your data quality is an issue. You're not able to upsell, cross-sell to your customers because your data quality is an issue. And your operations costs are heavy because you're trying to service customers, but you have poor data supporting all your analytics. And ultimately, for any organization, you know how important analyzing, your operations, analyzing your data today is. But your analytics are only as strong as the data that is fed into it. Like in Java, there is this terminology saying garbage in, garbage out. So if you don't have relevant data that you're feeding into your analytics engine, then that is going to cost the organization a lot in terms of their decision making and their ability to cross-sell, upsell to customers further. So we solve such kind of mission-critical problems for our customers, and all of these services are seeing great traction in the market, both with existing customers and with new customers. Similarly, we're also doing things around government, around managed services, automating processes, helping bring in cutting-edge tech to government processes to ensure citizen services are smoother. They're able to, provide welfare schemes to citizens better, more accessible through WhatsApp, through, more citizen-friendly platforms. So all of these kind of green shoots that we've added are definitely helping us understand the kind of potential and the value that we can also offer to our customers better. And I'm happy to say that some of these things are also paying off. You will have seen it in the form of our results as well. From a hiring standpoint, we have continued to invest in sales, and we're doing very sharp-shooted sales hiring. We're not hiring generalists. We're hiring people who can help expand on each of these individual revenue streams that we've added. And we've fortunately found some good talent. Let's see how this pans out. So overall, strategy per se, what we started in Q4 last year continues to remain the same. We are pretty bullish about what we set forward. And of course, like all of you know, strategy takes some time to pay off. But we are very confident in what we had originally set forward. And we want to continue on the same path. And hopefully, it will reflect in our year-on-year results. So my request to all of you also is don't look at us like a quarter-on-quarter organization. Our focus is annual year-on-year growth, which we are gunning. Our annuity revenues continue to support us, and the green shoots are also adding to our annuity revenues. So please, thank you for your patience in us, and we look forward to continuing to put in the efforts to see how we can grow year on year. Thank you so much. And now I think we'll open it up for questions if no one has anything else to add.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a first question from the line of CA Nihar Shah from Crown Capital. Please go ahead.
Hello, am I audible?
Yes.
Yes, you're audible.
Yeah, so this was just in the reference to the guidance we gave on the last phone call. of expecting around 30% EBITDA growth.
You're breaking.
Your voice is muffled.
Hello.
Hello. Your voice is muffled.
Hello. Am I audible now?
Little better.
Better.
Okay. Just a second. So I was just saying that in the last call.
Mr. Shah?
Yeah.
No, I'm sorry, you're sounding muffled. Can you be in an area where the network is good?
Yeah. Am I audible now? Like I'm changed.
Little better. You can ask your question. Yeah.
Yeah, I was just asking that in the last call we said that we are expecting around 30% EBITDA growth and 20 to 25% revenue growth. So are we in line to do that for the year or has there been any change? Because our numbers have been great, so is there any change or are we in line to do that?
At the moment we are on course. I didn't get your name, I'm sorry. Harsha?
Yeah, this is Nihar Shah.
So we are, while we are investing significantly in all these additional revenue streams to pay off, we will be spending, we will continue to spend on our sales efforts and marketing efforts in Harsha. So I would not want to commit anything on numbers as such. We may be requiring to continue to make these investments to see that these green shoots pay off. But from a growth standpoint, we are hopeful and that all our strategies will pay off in the long term, and we are gunning for it.
Okay. And any sort of outlook for FY25 or 26 from your end?
So the idea is whatever we have, it's only been about 2-3 quarters since Butterfly actually started kicking off. And we are able to, we're slowly able to see the results of it. We hope to continue on the same trajectory.
Okay, so one last thing, how much percentage of customers we already have? Have we cross-sold or upsell, something like that? Like conversion ratio, do we have a conversion ratio where we use the Project Butterfly for the clients and they have converted and we have been able to sell more?
So definitely. I probably don't have a number around the conversion ratio, but we have started, so what we have done is we have segregated all our accounts into strategic growth, active accounts, etc. We've set targets for each of those accounts, and our account managers are, now consciously working on what all they can cross-sell into existing accounts.
Understood. All the best. I have no further questions. Thank you.
Thank you.
All right,
and all the best.
Thank you.
Thank you.
We have our next question from the line of Rajesh Ainor from ITI Limited. Please go ahead.
Hello.
Hello.
Mr. Ainor.
Yeah, thanks for the opportunity. So my question is around, the margin profile and because we have an existing...
Your voice is very low, Mr. Rajesh. Your voice is very low.
Is it better now?
Much better.
Yeah, sorry. So, the question was around margin profile because we have an existing business and then we are also required to make a lot of investments in the, in the upcoming areas which is under Project Butterfly. So, can you give us some sense of where exactly the margins would be heading and after the ramp-up phase or, how long can this phase be where we are growing at a higher rate?
Hi, this is Nitin here. From a cash and liquidity standpoint, when we closed for financial year in March 20, we're sitting on our liquidity of about 25 crores, and it has swelled to 45 crores for this quarter. And when I say that, it is inclusive of fixed deposit with banks, mutual funds, and the cash balances lying in our bank accounts. So definitely we definitely have a higher appetite, but in terms of the expected investments that we have to make in our Project Butterfly, it's more of an exploration journey. We do have, like Anisha had mentioned, we are going for hiring talent on a sharp shooting basis, where we see people who have relevant expertise and experience in this particular segment. We are trying to onboard them, and talent with experience definitely comes at a price tag. So in the short run, these investments have to be made to ensure that we are successfully able to navigate this transformation stage.
To further add to what Nitin said, what we are saying is that the investments will be in the next 6 months to a year. Thereafter, it will the margin growth you could see.
And what kind of margin profile does the underlying business have?
We are internally targeting at a 35% EBITDA.
So basically, all the revenue streams are multiple margins. Like, for example, the transmission services is a lower margin business, but ultimately, it covers the last mile, so it improves stickiness in the customer's premise, right? So some of these are lower margin, then the data is a high margin business. So whatever green shoots we've added are a combination of multiple margin.
Okay, but that part you're saying will be relatively clear after we are done with this investment phase, wherein obviously all these expenses will be getting loaded.
Yeah. Right.
Okay, sure. And what is our export business currently, and what is the kind of, are we really focusing on export also, because we have a lot on the plate in the domestic business itself?
We have added partners internationally with the endeavor to focus on export business. But in terms of sales personnel per se, our focus has been more in India.
Okay, and how much is exports currently for us as a percentage of top line?
It's about around 20%.
20, yeah.
Okay, sure. Okay, thanks a lot, sir.
Thanks.
All right, thank you.
Thank you. We have our next question from the line of Sumit Kothari, an individual investor. Please go ahead.
Hi, thanks for taking my question. There's an expenditure item which is called the IT infrastructure cost, which is shot up to almost 6 crores in the current quarter, which is like 6 times year on year, and still a substantial increase even from the last quarter. Can you give some detail on this cost and the trajectory going forward for this?
Sure, Sumit. So basically, if you remember from our last quarter, a lot of investors and analysts have been asking questions on our operating expenses as to reasons why it has shot up. Previously, what we were doing is, since we have also magnified our offerings, there's a lot of composite deals that we engage with our customers, wherein there is also a component of supply of IT hardware. So what we used to do earlier is we used to club this in operating expenses, and that's where if you look at our earlier results, you'll see that the operating costs shot up, and there were a lot of questions on that. So what we have done is to provide better clarity. We have carved out this from operating expenses and mentioned it separately for the previous periods as well. From a trajectory standpoint, these are deals. These are, we cannot say for certainty. This depends on how the engagement progresses, the delivery progresses.
Okay.
And typically in most government deals, these are all always composite. So you have to provide hardware, software, managed services, maintenance, all of that as part of an overall tender, right? So like even our BSNL, etc. All of these accounts. And even the accounts that we've added in government in the last quarter, they all have a component of hardware, a component of software, and managed services AMC. So that's why you see that number go up.
Sure, got it. The next question is regarding the margins. I know we have spoken a lot about margins, but see, I've been an investor in Intense probably for the last decade, pretty large investor, and I've always seen that the margins have been in the range of 30 to 35%. Now, I know that we are evolving ourselves from an enterprise product company to a tech-enabled company, and we are making huge investments, and the margins are lower currently around the 18 to 20% range. So what we are saying is that probably after 6-8 months, when we are done with our investments, we'll go back to a 35% kind of EBITDA margins in the long run?
Yeah. That is the hope. But like I said, in the new revenue streams that we've added, some revenue streams are low margin but high volume, high stickiness businesses, and some are low volume but high margin businesses. We've added both as a combination, and the strategies, I mean, you understand, with the intention of improving stickiness with our customers, with the intention of improving longevity of deals, etc. Right? So given the fact that we are adding a combination of margin businesses, I may not be able to comment at the moment as to how much that number will be per se, but the endeavor is to see that we are able to maximize on it.
Even if we have some clarity on the direction, if not the absolute number, is it fair to say that the 18-20% is like the rock bottom in terms of margins, and it can probably only go up from here? Do we have at least that clarity? I know we are looking at a consolidated mix of different products here, but can we say with full confidence that this 18-20% is bare minimum that will drop?
Yeah. So, Sumit, hi, Nitin here. So, yes, Sumit, like we said, even for the current quarter, if you see 70% of our revenue continues to come from annual engagements, and 30% is something that we have started to see come from TAS, government services, transmission services. So, it would be safe to say that 18 to 20% would continue to be delivered on quarter-on-quarter basis.
Okay.
And also, see, the Project Butterfly is something that we have put in place. It's a multi-year transformative strategy, and definitely as an outcome of those strategy, once we have in place, overall, depending on the weightage of the revenue coming from each of the segments, right, you will see that our absolute number will definitely be higher from every year performance.
Yeah, the operating leverage should come into picture maybe once we have some scale. Nitin, if you can highlight something on the top line front at least. So now we are changing our strategy from enterprise to a tech-enabled service company. So I expect at least the revenue predictability to be much higher than what we have seen earlier days. Like, because it was a product company, the cycles were longer, and we were not sure about giving any guidance for the next quarter or for the next year also. But now we have some predictability in terms of revenue. So can we say that this 32 crore that we did in this quarter is at least like the base revenue that we have, or can it be very volatile even the revenue part?
See, I'll address your question in two parts, Sumit. So first thing is quarter-on-quarter results that we declare. I would request you to not perceive is look us from that prism. Kindly evaluate us from year-on-year basis. Probably we have done 32 crores in this quarter. On a year-on-year basis, will definitely deliver growth compared to the prior years. But it also depends on the traction that we're seeing from each of the segments, like I mentioned, Sumit.
Just to add to what Nitin said, this is not pure play people resources, like, you hire number of people and number of people like any traditional services. These are all niche technology-based services, and it has also its own selling cycle.
Right. I was just trying to reiterate the guidance that you have given me. So the 32%, if you 32 crores, if you annualize it, you come close to 120 crores. 90 odd crores we have done in the last financial year. So is this a fair number to have in our valuation sheet, 120 odd crores for the full year.
So, Sumit, I understand you have been joining us from all quarterly earnings calls, right? So, while we had mentioned...
before that, so I've been
correct.
investor under this for a long time. Yeah.
Correct. No, Sumit, so basically in Q4, if you traditionally looked at our results, Q4 was lumpier, wherein most of 50% rather of our top line used to come in Q4. But what we have done started to do is we have, wherever contract is coming up for renewal, we are redefining the milestones so that the revenue gets recognized on a straight line basis, and which would address your volatility factor. But having said that, from a year-to-year basis, since we are redefining those essentially same contracts with marginal growth in some cases and good growth in some cases, I would not really extrapolate this quarter's performance to the whole year. While our ambition and objective is to achieve those, but we will definitely are looking at what you had mentioned, 20% growth year on year.
Yes. Great. At least I have some clarity on this. So, what do you think will be like we are making some investments, we are changing the strategy. So, which year would you think will be the best year in some time, like FY25? FY26, if you can throw some light, because we can see it happening because we are making some investments based on some assumptions, and we can see it happening. So can you say with some confidence that FY25 will be the year for us, or FY26, if you can throw some light on that?
Sumit, I would say with a lot of disclaimers here, because FY25-26, 2-3 years is a very big time for the macroeconomics and microeconomics to at play, which are definitely not in our control. But FY26 and is where we'll see the total outcome of our Project Butterfly, because we put the advanced stages of its implementation. So I'll put it that way.
Right. And because of the change in strategy, can you expect the payables and the debtors which are there to change? Now we have like almost 40 odd crores of receivables. So because of the change of cycles, because it's more like a service company now, can we expect the receivables to be received much before and the working capital cycle to improve, or is it going to continue for some more time?
No. See, like I've mentioned, definitely the collections will improve. Even if in the current quarter, if you look at from March, although the reported numbers has gone down only marginally from 53 crores to 51 crores, right? But as we speak today, we have actually realized more than 20% of outstanding from September. And we are expecting to receive, have higher collections in this current month as well. So definitely you'll see improvement in collection cycles, better working capital management, Sumit.
Great. Good to know that. And do you have any internal...
May I request you to join back the queue as there are other participants waiting?
Sure.
Thank you. We have our next question from the line of Namit Arora from Ingrowth Capital. Please go ahead.
Thank you for the opportunity. Sir, my question was on competitive landscape. If you could give us your thoughts on some of the companies that you run into typically, as competitors. That was one. Second is that, how do you position yourself in terms of differentiators, or what you think is your competitive advantage vis-a-vis these competitors? That's the second question. And the third related question is that, are there any larger companies that you sort of respect or admire, which may be sort of role models or aspirations? I would be very grateful for your thoughts on these questions. Thank you, sir.
That's a very good question, sir. The thing is that we are talking about a niche areas in the technology side. So this is not a pure play services game which we have planned to play. We are talking about, we have built IPSS on the in the data side. We have data deduplication, data extraction, data quality tools, all these things. So with our even our low-code platform and some of the things which we have built, the digital engagement platform which have been deployed at scale, these tools help in delivering faster and at a better cost to the end customer. So our value proposition, we being over the years for last 1.5 decade plus, we built a lot of IP assets being the product mindset as a company, and we are now monetizing all these assets in terms of providing solutions, tech-enabled solutions, tech-enabled services. So that's the key differentiator, and you will find very few people with this kind of capabilities. Of course, there are niche data, only data services players, only low-code players, only transmission players, and so on and so forth. So we are giving us a combination of the value what we deliver in terms of time to deliver and in terms of cost advantage.
Got it. That's very, very helpful, sir. Thank you very much, and all the very best to the entire team. Thank you.
Thank you. Thank you very much.
Thank you.
Thank you.
Thank you.
We have our next question from the line of Yogesh Bhatia from Sequent Investment. Please go ahead.
Hi, sir. Actually, this is my first time attending the call for Intense Technologies. I wanted to know how do we work in the sense of, do we have any sort of order book that we look at, or do we have some contracts, or how does the revenue, how do they work for us?
See, the farming or the existing annuity revenue comes from the existing contracts what we have with our customers, and the new logos, new customers, or the new contracts what come in. So existing contracts comprise of, the old ones. Some of them have licensed AMC, some of them are complete managed services where you get paid monthly basis. Some we have on a SaaS model. So existing contracts, we have a mixed thing, but we are looking at building most of our contracts into annuity-based revenues.
So ideally, when Intense Technologies goes and gets a client or a logo, it's more like a 4-year, 3-year, 5-year annuity sort of business, that this is the kind of service that we are going to provide for the next 4-5 years.
Absolutely.
So are we able to ascertain certain value when we get the contract? See, this is the amount of work that we are going to do for them over the period of next 4 years, 5 years?
Typically, yes. From a standpoint, they could be with this new strategy. We could see some upsides to it by cross-selling and upselling other services to the existing client.
Okay. And ideally, what is the size of these kind of engagements? Like, let's say a 10 crore, 5 crore sort of client is what we look at annually, or it's larger? And what sort of resources usually we deploy? I mean, by the number of, engineers or man-hours that we deploy for this engagement.
That's what I said. The difference here is just it's not people versus the revenue. It's not like a typical 100% services. Services organization where, number of people per head earnings is what it is taken into. Here, we bring in the IP. With the IP and the services, a number of people required will be less because of using the IP.
Sure.
The margins are better.
Okay. And what is the ticket size of a logo that we have?
It all depends, sir. The size we are, we take deals right from even a 1 crore to we have customers who pay us 1 crore a year to $1 million a year to $2-3 million a year also. It all depends on the size of the deal, size of the work, the engagement, what we take up. We have a mix of all of these. Some are just purely.
For us as investor community, if we want to track, like you say that you will do 25% growth or 30% growth or some number that you have envisaged as a company. But we as investor community, how do we track that? How do we get a sense that this is going to happen, or, these are the chances of... Because most of the IT companies that we understand, they work on order book basis or they have some contract value basis. How do we as an investment community try to track that for Intense Technologies?
So to answer your question, Yogesh, see, basically, like we mentioned, we have our annuity engagements, which typically see a growth of 20% year on year.
So is it fair to assume that the 90 crore turnover that we did the last year, in which how much percentage annuity? How do as an investor I know that?
I understand. So out of which about 60 crores was coming from annuity engagements, Yogesh. Okay. And from year on year, you can probably assume that we'll be able to deliver 15 to 20% to be on the safe side on our annuity engagements. And since we have forayed into new services, it would be very difficult for us to put any number because the market traction that we are receiving for it looks very promising, and there's only it's going to be only a better year-on-year performance. I'll put it that way.
Okay. So, and if you can break this number for me for this quarter, the 32 crore, how much was annuity and how much was new business?
About 25 crores has come from annuity, and the balance has come from our TAS services, government services, data services, and bit of from transmission services.
Okay. Thank you.
This has started to come in just after 2 to 3 quarters of our offerings.
Of the Project Butterfly, what you mentioned.
Yes.
Okay. Thank you, sir. That should be able.
Thank you, Yogesh.
Thank you. We have our next question from the line of Milan Shah from Urmil Research Consultancy. Please go ahead.
Hello. Can you hear me?
Mr. Shah, it is little low.
Hello.
Can you speak louder, please? Can you use
Hello.
your handset, please? Mr.
Hello.
Shah?
Hello. Can you hear me?
No, sir, we are not able to hear you clearly.
Hello. Can you hear now?
It is little better. Can you ask your question?
Okay. Congratulations for good setup number in sales. My question is understanding the infrastructure cost which is increased in half yearly from 1.5 crore to 8.99 crore. What is the trajectory for full year? And what is this investment? It is like a cloud service?
So, hi Nitin here. So if I have understood your question correctly, you want to understand the nature of this cost and what it is going to be for this financial year, right?
Yeah.
So basically, to answer your first question, these are a hardware procurement cost that we also deliver as part of a composite contract with our customers, and these are very deal-specific, Milan. So it would be very difficult for us to. So if there is another deal that comes up from government or from other customers that requires us to supply some hardware servers, then this definitely would go up. And the cost, the recovery cycles again is pretty quick. We realize our invoices within 30 to 45 days max. So it would be very difficult for me to give you a trajectory. This is very deal specific.
Okay. And what is the margin in this investment? If we have invested 10 crore in this infrastructure cost, we got any sense of margin in this investment?
See, it varies from contract to contract.
Combined of our services, right?
Yeah.
So it will have a combination of service and software and this piece. So while the margin on this front will be low, but the margin on the services, software services part will be higher to cover up. So it works like that.
Okay. And my second piece is intangible asset is 20.9 crore. So it is depreciated or write-offs in long run, or it is casually it is going to be write-offs?
So, Milan, these are our softwares that have been under development for the company for quite some time. We are actually developing a marketing communication hub which we call it as Reach. We are also developing blockchain. So these all softwares are being developed based on our on the ground feedback from our customers, which ensure that there will be economic benefits that we definitely are going to realize once we deploy these solutions commercially. And for few of our solutions, we have reached at the cusp of deployment. We are in UAT testing phase. So we will see some of these being deployed in the current year. So once we are able to, license them to our customers, deploy them in the customer's environment, we'll start amortizing it. And at that point of time, definitely we'll try to evaluate what would be the economic life of this, and then we'll amortize over the period of such useful life.
Okay, and congratulations for meeting sir, because after joining him, our company cash position is increasing, and we see he is going to be making good efforts in collecting dues. But I want to understand, in previous call, any USA company is going to be, we are going to acquisition or in negotiation stage. It is any development in this stage?
We are in talks in terms of partnership. We've, I think, made a press release. We had tied up with the NatSoft to be our strategic partner for US to take our products and solutions to the market. But from a strategic perspective, nothing. That is only a sales and marketing agreement, but not a financial investments or anything which has come up as yet.
Okay, and CDR India is making very, very good announcement. I want to understand after AGM is completed 1 month before, and extend the disclosure to extend is after 1 month. It is what is the company secretary are going to do in 1 month. So to be careful, and I suggest company has to do some presentation to Bombay, or investor has company to make any investor conference in company.
We are definitely planning. It's a very good input. We're definitely planning to have a presentation and a roadshow post Diwali is what we are looking at. We are coordinating with CDR to come and present what we in depth to tell you what we are doing in our company as a project butterfly, and what are the solutions we have, what are the IP assets we have, what are the customers we have, all those details.
Sir, can you give me any detailing sector-wise, any banking, government services and insurance, any segregate number? I didn't want to perfect number. How percentage-wise we are going to service these industries?
We don't have that bifurcation at hand.
Okay, no problem, sir. If I will mail for that one. But it is better to understand which sector we are going to more.
Yeah, we are focusing a lot on the banking side, BFSI side. From what we were hitherto in the beginning, we were more or less known as a telecom company, but we made in the last 1.5, 2 years, we made great foray into BFSI and made significant progress in that.
And my last question is, what is the manpower strength right now, in any reason to add or maybe restructuring for the same?
We are currently at about 565 odd people. All investments predominantly in this year have been made towards the sales side only, business development, sales, etc. So any new additions also will more or less be in these directions. To service our existing customers, I think we have enough people. We won't need to add significantly on that front. Investments will largely be on the sales front only.
Okay, and we can confident we are going to more see growth in next 1 or 2 years next time.
That's the hope.
That's the reason we are making these investments, and we are already seeing some green shoots in that. It's quite encouraging to see that, and we hope we definitely do well, much better than what we do this year.
Okay, thank you, and good wishes for good set of numbers for all year.
Thank you very much.
Thank you.
Thank you. We have our next question from the line of Aegis Lakhani, an individual investor. Please go ahead.
Yeah, hi Shastri sir and team. Congratulations. And, Anisha, thanks for the opening remarks. That was quite useful. I have just two follow-ups on your opening remarks and then a couple of questions to Nitin maybe. So, Anisha, first, there are 2 points which were quite clear that you sort of articulated at the start. And I want to refer to both of those. One is that you mentioned the new streams of revenue. So are these all built out on the NXT platform in the plug-and-play format that we've been historically following? That's one on your opening. And second is, you spoke and the words that were distinctly different in when you spoke about the cash being used to make sales, which has been a weak function. You spoke about being more pointed, being more very vertical specific in your approach of sales. Now, having seen the company over many years, we've had this kind of an approach when we won the Vodafone deal in, I think, 2016, when we had the European our sales function head there who was also trying to, cross-reference the India to the Vodafone, or with Anil coming on board and, managing the large PSU project. But so I'm really trying to understand that in the erstwhile approach of sales versus the current, what is really changed and how do you measure it and manage it?
One big difference before Anisha answers that, what we were doing then was only selling license and services around the license. But now we've expanded our offerings completely. Over to you, Anisha.
Sure. So, thanks, Aegis. The first question that you asked around the next platform. So, in a lot of these implementations, we do use that underlying IP to be able to optimize those processes, service the customer faster, better, etc. But it's not necessarily a hard and fast. Like, for example, in the case of data opportunities, for instance, right? We have our own proprietary data IP, for deduplication, for quality, ETL, etc. But if the customer comes and says, no, I already have Informatica licenses and I want to use that, then we are comfortable with that as well. So I think that's to answer your first question. Your second question, while we did hire sales people in the past to support the region or something like that. Now what I meant when I said focused sales hiring is, for instance, if I'm doing, say transmission services, then hiring someone who has the experience of having sold transmission services in BFSI in the past, or say data services, then someone who understands the data domain to be able to do solutionized selling in data services. So not a generalist salesperson to cover a continent or cover a region, but someone who has experience in each of these individual lines that I'm hiring for specifically. Like we hired someone for cloud services, someone who has been selling for AWS, Azure, etc. in the past. Then we hired someone for talent services, someone who was managing these competency centers at IBM, where they were placing people and doing managed services. So basically very pointed people who have had experience in exactly, that service stream in the past.
Got it. Anisha, how do you measure these people, salespeople?
Their experience for sure, number one. Are you
in terms of output, I'm sorry, I mean in terms of how do you measure their outputs? Like, do you all have like,
we have,
And do they have like farming targets or hunting targets or a combination of both? Could you just walk me through the, the measurement aspect of their output?
Sure. Yeah, so we have broken our teams down into farmers and hunters. The hunters are not involved with any of our existing accounts at all. Farmers are given individual account targets on how much they should be meeting. So we have specific targets that we agree upon collectively at the beginning of the year as part of our GTM. And then we have weekly calls, both to track progress of invoicing in the quarter as well as, their pipes for the years. So both ways.
And may I ask or learn who takes the reporting? Is it Anil, you, CK sir?
both of us, Anil and I.
Anil and you, got it. Okay, that's very helpful. My next question is to Nitin. Shastri sir had mentioned a couple of, maybe 2-3 years back that, he's trying to pivot from the license to the SaaS model. And as the licensing deals, and you also alluded to this in one of your remarks, that, you're trying to pivot to the SaaS. But the number you just quoted, look, out of your 90 crore revenues last year, 60 is annuity. You said that can grow at 20%, but 30 would still have the component of the upfronting licensing that is taking place. Is that understanding firstly correct? Point number 2, is there a pathway for you to be able to pivot that into, out of that 30, say, migrate some of it into the SaaS format in this current year and the year ahead? How does this all sort of piecemeal work?
See, what you said is correct. If you really look at the 70 crores and the balance 20 crores, 20 crores are the new licenses, new sales which have happened. Some of them, most of them have the opportunity to convert into if not for the hardware part, the other have an opportunity to convert into annuity revenues or add more revenues through upsell, cross-sell opportunities, if not straight away annuity. Some of the contracts are long-term contracts which are 4-5 years contracts, like the BSNL, like the Inmarsat, like the Vodafone ones which we have. So that's how it pans out. I hope I've answered your question.
Shastri sir, just a follow-up. So still 20 crore is upfront licenses that we are booking and selling year on year, broadly, including the hardware.
Not in licenses, it includes also hardware.
Okay, and what if you were to give me the cut between, say, the hardware and the licenses breakup? Maybe Nitin can get back to me on that. That's fine if you...
Get back to you.
Yeah. Perfect. That's very helpful. Nitin, 2 more questions to you. Typically, the hardware element is, we've seen with the earlier engagement with the PSU that the working capital sort of gets blocked up. So your comments and thoughts on that. And point number 2, you mentioned some time back that you're trying to improve the working capital cycle. But we have known time and again that it's very difficult for the customers who are used to the, long payment cycles to start paying earlier than what is desired or what the company would intend or like. So how do you really sort of get these old folks who we've been dealing with for multiple years with, a certain payment cycle to get them to make them paying earlier?
So to answer your question, earlier if you look at Q2 of last year, the DSO was about 214 days, and which we've been able to reduce to 197 days by the March 23 financial year end. And if you look at today, it is somewhere around 171 days. So what is also important is the composition of my total receivables. We do have some receivable from government, but we don't see any challenges in collections there. We should be able to optimize it further.
Especially to add that we had few problems. We have still problems that we are reducing the business. We are tightening our terms. For example, Nigeria was one place where we had to face a lot of difficulties in collections. So we have decreased our exposure towards such countries and such opportunities.
Okay. But how do you improve the receivable days?
Typically, if you really look at it, 70% of our monies come in within 60 days. What is the exact number? Do you have any numbers?
91 days.
91 days is what we get the 70% of our revenues, collections. There are some sticky customers, government customers, where it takes a longer period.
Okay. So Shastri sir, what I can decipher from what you're saying is that you're trying to focus more on the 70% business, which gives you the monies in the 90 days, over the government business, which is elongated to sort of a year or so, because that's how the average will come up to, say, 170, 180 days. Is that understanding correct?
Absolutely right.
But sir, we have a focus of doing more government-oriented projects as well, right? The three areas you mentioned, banking and government was a part of that. So then...
But you have to factor in your costing on these things. They have better margins compared to
not all government deals are come with poor receivable cycles, ages. We've not noticed that across all PSUs. Some PSUs are troublesome.
Got it. So one large PSU with which we won the multi-year deal, we don't sort of, the deal sizes got truncated and, there were a lot of further opportunities coming out there. So in our experience now, is it that you will be far more cautious in picking up such kind of business?
Yes. Definitely we'll be very cautious in terms of... So we have now a complete process which we have set up for risk assessment and all of that before we take up the things.
Wonderful. And sir, second half continues to be a seasonally better half than the first. Is that trajectory is continuing even in the newer format of the more annuity stream?
Yes, we've tried to straight line our Q4 across the financial year. The idea is to, at least replicate what we've been able to perform, but that would also depend on a lot of contracts which are under negotiations to materialize before end of this financial year.
Got it. And Shakti sir, one last question. You will see earlier we had the regiment of, having that one large licensing deal for which we were, subject to different timelines because of which you could not commit to how the year may pan out for you. As you have pivoted more to, SaaS model, as an investor, is there any way that you and your team can potentially figure out and even quantify, the extent of the order wins, the duration of the order wins? Because earlier at least, you would give out a broad ballpark number of the licensing deal possibilities and the one that you have won. But today, because there is your revenue traction is improving, but the underlying of what is resulting is known to you but not to us. So there is the gap that needs to be sort of filled.
What happens in a typical enterprise grade license sales is that you have the architecture review, business sign-offs, budgetary provisions, POCs, pilots. These are all long drawn, and sometimes you do everything, the entire team changes, the new folks come. So those were the risks which we have seen. But when it comes to pure play services, it's not much of them. They just see the capabilities, what we have, what is the immediate because these are faster outcome based opportunities which definitely don't have the hangover of the ones like selling the enterprise product sales.
So fair point. Sir, if you could in your annual report even just give out the new cut of these revenues, which are more quicker than the long drawn process, or some, if you and your team can figure some way of giving better disclosures, like much appreciate the infrastructure cost disclosure which has been bifurcated. It's very helpful to us. So just maybe you can sort of consult with the team if you think it is appropriate.
Sure.
Yeah, thanks so much and all the best, sir.
Thanks.
Thank you. We have our next question from the line of CA Nihar Shah from Crown Capital. Please go ahead.
Hello, am I audible?
Yes.
Thank you for taking my question again. We spoke about our annual
Can you speak a bit louder, please, Mr. Nihar Shah?
Yeah, hello.
Yes.
Yeah. Thank you for taking the question again. Just one clarification. We talked about annual growth of around 20% year on year. So can you just give me the drivers for such growth, like what has changed over the years? Because we haven't seen this much growth over the years, but now we are expecting around 20% growth. So any change in the drivers or something?
That is what we've been talking about, the Project Butterfly. where we have increased the number of lines of revenue streams. If you really look at the data services, they were not there. Transmission services were not there. The cloud services were not there. These are all the new revenue streams which we have added to our portfolio, and that's what will be the result in what we expect the growth to come from.
Okay, so majorly yeah. Oh, no problem. Thank you. All the best.
Mr. Shastri.
Thanks. Siddharth, are we on schedule? Because
Mr. Siddharth, you're on talk mode. You can speak. Should we take the next question, sir?
Sure, ma'am.
Sure. We have a question from Ketan Patak, an individual investor. Please go ahead.
Good afternoon.
Yeah, good afternoon.
Yeah, am I audible?
Mr. Patak.
Yeah, good afternoon and congratulations on good numbers. I have a few questions. Most of them have been asked by previous people, but I wanted to understand, we have done 56 crores in H2. So would it be a fair assumption, or is the aspiration for us to be in the range of 120 to 125 crores for this financial year?
Chetan, see, we would definitely refrain from permitting any hardline number. What we can at this point of say is we'll definitely outperform last year's published numbers, because like I said, there are a lot of contracts which are under discussions, negotiation. A lot of it depends on whether we're able to conclude those contracts by Q4, and that would determine, sort of drive our numbers as an organization.
No, I understand that, but as an organization, we have been talking a lot about the Project Butterfly for last few quarters. So as an organization, there would have been an aspiration of being a 200-250 crore company over the next 3-5 years. So
aspirations are there, ambitions are there. We are working, making the investments towards that, but we are, we don't want to commit a hard number, sir. That's it. We definitely have aspiration. As Nitin said, we would want to outperform what we have done last year.
Okay, my next question was, sticking to what we did last year, because we are not talking about absolute numbers for the current year, or even for H1, the 56 crores that we have done, what would be the breakup of license to services in this?
The majority of it, it's a composite thing that, as what I mentioned, we have most of our contracts are now we are moving them to composite deals like license services. For example, in BSNL, we provide operation support, we provide customization services, all of that at a transaction-based price. In another engagement, we have a combination of all these sort of monthly fixed price. Most of it, the licenses revenue is the most minimalistic, but if you really look at it as a complete managed services, it's a combo of all that, combination of everything.
Okay, so are we saying that we are not really pursuing any license-specific deals?
Those are very minimal, sir, because what we have seen is that, even in the interest of our company, the composite deals are more profitable and better. This thing is license. World has changed now because of the SaaS coming in a big way. Enterprise licenses, people are willing to, they bargain quite a lot, and, you don't get the actual value what you need to deserve to get. Because annuity is predictable revenue for them, predictable cost for them, and predictable revenue for us. And it's win-win for both the client and the vendor.
Sure, I understand. So what I wanted to know is, I'm sure there could be some legacy customers who would be only license specific.
Yeah. Those continue there, but then they also take our support services. They also take our operation support, change requests.
Right.
So those customers who are legacy customers who are only license specific, what was the licensing model for them? Was it a perpetual license? Was it a subscription-based license?
Perpetual license with AMC of 15, some customers 15, some 12, some 18%. And there are some customers where we also have given growth licenses. The more customers they add, they pay additional license fees.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments. Over to you, sir.
As always, thank you very much for taking your time to participate in this earnings call. I really appreciate all the inputs and the suggestions given by every one of them. We will take it internally and consider all your valued inputs. Thank you very much, and hope to see you all in the next quarter earning call.
Thank you, sir. On behalf of Intense Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.